Hey traders, Akil Stokes here, and welcome back to another episode of the Forex Market Preview. If you are one of the 107,000 subscribers that we have over on YouTube, I just want to say thank you as always for your continued support. Every time you guys like, share, and comment, we continue to gain momentum with this video and touch more and more traders. And if you are new to this channel, this is your first time stumbling across the Trade Empowered YouTube page, or maybe you're on my personal page, thank you for joining. What we do here each and every week with the Forex Market Preview is show you a few of the trading opportunities that are on my radar and really show you the type of analysis that I like to do in the market. So it's not a video where we try to find trading opportunities. I had a good discussion with a trader the other day where I was trying to explain our job isn't to find opportunities, meaning our job isn't to open up a chart and just look for reasons to buy and look for reasons to sell. Our job is to open up a chart, perform analysis, and if there happens to be an opportunity that is on the horizon, we wait for it. And if that opportunity comes, then we take it. And that's kind of the difference between forcing trades and sticking to your plan. So today, we're going to take a look at two pairs. I'm going to show you three trading opportunities. We're going to start on the euro yen, and then we're going to talk about a trading opportunity on the dollar yen as well. So let's hop right into things. Euro yen, let's start on the daily chart here. And you can see that recently we have been in consolidation. Now I do have some bigger picture expectations for this pair. We're not going to worry about it right now since we've been essentially moving sideways for the last 2 months or so. But to this chart, it may I guess to the newer trader, the newer viewer, this chart may look like a bunch of junk. And you know what? I wouldn't disagree with you. For the most part, this pair has been a bunch of junk. The market moves in two types of ways, guys. It trends or it consolidates. When it trends, we have nice smooth actions such as this. Nice little swing low to swing high, little outside return, then an extension, right? When it consolidates, it moves sideways, and it doesn't always have a rhyme or reason. Now, there is a difference between structured consolidation and regular consolidation, but really there's no true, there's no consistent path of higher highs and lower lows, or lower highs and lower lows, stuff like that. But when you look at a chart right here, you can see that price action has come up. We've retraced. Then we've created a higher high, then we've come back down, we've created a lower low, and then we've come back down. We refused to retest our previous structure highs, then we double bottomed down here, then we broke and closed above that, and now we're sitting right in the middle. This is called consolidation. And actually, if I bring on a nice little tool here, it'll give you hopefully it'll give you a little bit of a better visual representation. This has been something that I've been playing around with in the live room and in the syndicate over the past week. We're always looking for ways to make our teaching better. I always mention this. One of the biggest issues that we face when working with newer traders, or I guess the biggest hurdle or obstacle that traders get stuck at, is identifying trend, because it can be very subjective. I'm actually about to write an article. I promised to write an article to FX Trader magazine on the subject of subjectivity. I have no idea what I'm going to write about. They asked me, they said, "Hey, Akil, we need you. Can you give me an article by the 20th? I said, "Sure." And then later on, I said, "What the heck am I going to write about?" But it's a very interesting subject. But subjectivity is one of the key obstacles that stand in the way of traders when you're performing this type of analysis, because we're all going to see things different. You're never going to sit 100 traders in a room and get one idea for what the market's doing. We see this a lot with Elliott wave analysis as well. A lot of I'm not a fan of Elliott waves. I'm not an Elliott wave basher, but my big concern with Elliott waves are if you put 100 Elliott wave traders in a room, you're probably going to get 50 different answers on which wave is wave 3. So there's a lot of subjectivity. Now, the cure to that is by training your eyes, right? You train your eyes to see the market a specific way. And the more you work on that skill, the more you train that skill of reading a price chart, you're going to be more consistent with how you read a price chart. So which ebbs and flows you take into account, which ebbs and flows you ignore. But understand, you're never going to, unless you're trading a mechanical system, you're never going to get 100 traders in a room and get one idea here. But let me go and just put this thing in for a second. Let me change this a bit since we're on the daily chart, and boom. All right, so you can see here, we have a visual representation of this consolidation level. You can see the NSH here. This is new structure high. Then we put in a higher low. Then we put in a lower high, right? Then we put in a structure low right here, really a double bottom because we don't have a close below. But then we violate our previous lower high, right? So it looks as like we may be shifting into a bearish trend here. Then we violate our previous structure high right here and put in a new structure high. But then we come right down, and essentially we're right in the middle of consolidation. So when I see a chart like this, it's going back to what I mentioned earlier. I don't want to force a trade, right? In here, there is nothing for me, right? There is absolutely nothing when the market is trading right here in the middle. It doesn't mean there's not a trading opportunity. Many of you guys may trade different ways and have different styles to catch this. The way I trade, being a price action trader and really a structure-based trader, there's nothing I can do while price action is just hanging in the middle of a consolidation. Why? Because we're not around any significant level of structure and we don't have any true trend. So I can't predict. Again, I have longer term predictions, but as far as the next move, I can't predict whether we're gonna go higher or lower from this mark. And that's okay, guys. Our ego kind of steps in the way sometimes when we look at trading opportunities and we feel like we have to be this expert, right? For you guys, I know many of my former clients are teaching currently. Well done for you guys. And one of the hard things about teaching is when you put yourself in that role as an educator, people expect you to always have the answer. And that's just not the reality of trading. And we never have the answer in the markets because, well, the markets do whatever they want to do whenever they want to do it. So it is perfectly okay. Don't feel guilty if you look at a price chart and you just shrug your shoulders and say, I don't know what's happening. And that's the case right here. What I do know, however, is what levels I need to pay attention to. And the two levels I need to pay attention to are our current level of resistance up here, of potential resistance, I guess we should say, which is going to be up here, and our current level of potential support, which is going to be down here. And although I may not have any rhyme or reason to involve myself in a trade at the current moment, I know that these two levels are going to offer trading opportunities. So that's what I spend my time prepping for. I spend my time going through that if-then thought syntax and saying, if price action hits my level of resistance, then this is how I'm going to attack the markets. If price action hits my next level of support, then this is how I'm going to attack the markets. And if we go down to a lower time frame here, let's hop down to a 60-minute chart, more of my trading time frame. Actually, let's go to a 4-hour. You're going to see that we're going to have two opportunities. Now, sticking with the little lines that are on your chart, right? Showing you guys new structure highs, swing high to swing lows, swing low to swing highs, right? These are very important because if you are going to be a pattern trader, you can't just hop into the market and try to trade advanced pattern formations. That's another myth that I see, or another issue I guess I see a lot of traders do. They see pattern formations as an easy way to make money, right? Or maybe not an easy way, maybe easy is the wrong word, but they see it as a direct way to make money. And this can kind of go for any strategy. Whereas the reality of trading is you have to work backwards, right? You can't have, all right, in order to make profit, consistent profit in the market, keyword consistent profit in the market, you need a strategy with a positive expectancy. You need to create a strategy, right? In order to create a strategy, you have to know how to perform technical analysis. In order to know how to perform technical analysis, you have to train yourself on the basics. And we see a lot of traders hop into pattern formations because they're easy to do. You can Google it. You see these little triangles and it's like, oh, that doesn't look too bad. But in order to identify an advanced pattern formation, you first must understand what is an advanced pattern formation. And an advanced pattern formation is when price action moves in a specific series, it ebbs and flows in a specific way, and a specific way that hits specific Fibonacci levels, right, in a specific order. And in order to draw your Fibonacci levels in correctly, you have to first understand what? how the market ebbs and flows, right? So if you can't identify swing highs and swing lows, you can't draw Fibonacci's on. If you can't draw Fibonacci's on, you're going to have a really difficult time identifying these advanced pattern formations. So the first thing we want to look at is this most recent new structure high to higher low right here. And this is the level I want to draw my Fibonacci on. So I go and take my Fibonacci retracement tool, drag it from my swing high to my swing low right here. And I can see that, right, after our initial move, which we're going to call our X to A move, right? After our initial move here, actually, let's just make it easy on myself. This is going to be our X to A, right? Our B leg comes past our 618 retracement. So I know that if price action comes to this specific Fibonacci level, I'm on alert for a Gartley formation in this case. You can see this can also be a cipher, but it's going to end up not being valid later. It's actually not going to be a cipher either now that I look at it. But we have an X to A to B. We have a B to C right here. And if price action were to rally up, I'm going to have a decompletion for a Gartley formation, a bearish Gartley formation right up at 131.55. And you can see the decompletion, that's the completion point where we would put our orders on for this particular pattern formation, comes right inside that higher resistance zone that we drew out earlier. So what I'm doing is I'm taking my initial analysis. I'm not forcing a trade, but I'm taking my initial analysis. I'm forming an idea of where I would like to get long at, where I would like to get short at. Then I'm going backwards and I'm looking for reasons for entry. I'm doing predictions in the market and saying to myself, if this were to happen, then this would give me an opportunity to get involved. And we can do the same thing for this as well. If we take our Fibonacci retracement tool, let's just go to our little toolbox here, Fib retracement. I can't remember the last time I actually went to my little deal here. I used to use the shortcuts all the time. But if I measure our swing low to swing high here, we're going to see that price action comes to our 50% retracement, right? And this is going to put me on alert for a different advanced pattern formation. This is going to put me on alert for a potential bat formation. So an X to A right here, an A to B, a B to C right here, and a C to D, which is going to complete right down here at my $1.28 level, which is a nice psychological number. And as you can see, this completes inside that zone as well. So although price action is kind of stuck like Chuck in the middle of support and resistance, and there's nothing that I can do right now, going into the week, right, I know exactly, I've basically bracketed myself. I know that if price action goes up, this is where I can get short, 131.55. If price action breaks lower, this is where I can get long, 128 even. And now my job isn't to force any trades in the meantime, it's to sit back and wait for the market to show its hand. Maybe the market gives me an opportunity and I can take a trade. Maybe it doesn't. I have to end up right-clicking my charts and erasing everything. But that's the job of trading. Most of the time, we're going to do this type of analysis, and then we're going to come back 2 days later, and the market does something completely different. We're like, oh, well, next. But I'll tell you what, all it takes is one good trade. All it takes is consistently doing your analysis and to find that one good trade to make or break really your trading day, your trading week, your trading month, depending on what time frame you're trading on. A great example of that came in our syndicate program this week. We got off to a rough start in September. September has historically been, if you've been with me a while, you've heard me say this probably a million times. September is historically a rough month for me. It's the month where volatility kicks back up in the market. You guys have maybe heard the saying, sell in May and go away, right? A lot of traders take vacation during the summer, and summer trading is typically kind of slow. Now, if you've seen our video, where is it? I put this into the syndicate last August 31st. We did a nice little video on our performance review. We absolutely destroyed summer, which was pretty cool to see. But typically, summer is a little bit slow, and then the volatility gets back into it in September as some of the traders come back and look to place positions in the market. But historically, September has been a rough month for me, especially when I was a pattern trader only. And we started off this September taking 6 pattern formations in our syndicate program. 5 of them were losers, right? 1 winner, 5 losers on advanced pattern formations. However, One trade, right? Jason Greystone had a trade on the pound yen. One trade on the pound yen made up for all 5 of those losers, still putting us in the black, so putting us in profit for the first week in the month. And again, it's a great example of how, and that's been a pair that we've been looking at. If you've been following the Forex market preview, we've been looking at that for over a month now, waiting for an opportunity. And again, it's one of those things where you predict, you erase your drawing tools because the market doesn't do it. You predict, you erase your drawing tools because the market doesn't do it. And then you predict, and then every once in a while, the market actually fulfills your prediction, and boom, you take advantage of it. And now one single trade, right? I think it was a 112 pip winner he had on that. One single trade flushed out all of those or 5 losses that we took. And that's what your trading should look like. It shouldn't be the other way. That's what your trading should look like. So let's go to our next pair here. Oh, by the way, I talked about September. If you want to know more about kind of the September woes, and again, last year was very good. It's gotten better for me once I've really introduced more trading strategies. When I was an advanced pattern trader only, it was pretty difficult. But once I started doing more price action and structure-based trading and trend trading, it kind of gave myself a natural hedge. But if you want more information on that, if you're watching this on my YouTube page, just scroll down. If not, you can just YouTube search Akil Stokes and you'll find it. This lovely face right here. Look at that sexy, man. You're so sexy. Let's go down to watch every single video on here first, and then go down to interviews and special events. Right, click that button, and it should be, where is it at? I did this with 2 blokes. The newest one, here it goes. Click on the one at the very bottom, right? So the least popular of these special event videos. It's the latest one I did. But it was an interview I did with 2 blokes trading on how to identify if you're system hopping. And they talk for a little bit in the beginning about some other stuff. That's just the way they do their podcast. But I think if you go about maybe like seven minutes in, the interview starts, and I talk a lot about kind of how I went about adapting and adjusting my trading style to survive the different market conditions. It was a pretty good interview. But check it out if you want more kind of detail on that September issue. Now, let's go to our next pair here. Let's go to, what I want to go to? Dollar yen. Actually, first, let's go to dollar Canada for no better reason just to show you that. We talked about this pair last week, and, yep. Remember, you can go back and watch last week's video. Remember what we talked about here? Yeah, that happened. I rarely do that, but this is this is one of the times we got to say, hey, I told you so. I told you, bearish breakout. But I also bring this up because we were looking for a similar thing on the dollar yen here. We're looking for a potential bearish breakout on the dollar yen. And this is going to be a very similar setup to what we were looking at on Canada, where we had the bearish breakout and we're looking for a retested structure. So you can see dollar yen was retesting these previous structure lows down here. I'm actually going to take off these little swing deals here. I'm going to put in my real deal. Let's put in the real DSR here, give you a visual representation of support and resistance. Again, some of the indicators that we use here at Trading Power to kind of get rid of that subjectivity. It really helps with training. I learned how to train before I had any of this stuff, but a lot of our members that are coming through the course, they always talk about these DSRs are a godsend because it helps really confirm, I guess, the levels that they were looking at, which is a good thing. But you can see dollar yen here on the daily, right? We were retesting previous structure lows. We were in a bit of consolidation here. And we were on alert, or I was on alert for a bearish breakout. Why? For the mere fact that I know how to read a price chart, right? I know how to read a price chart. I know that we were ebbing and flowing. We had hit a bit of consolidation, right? Where the market had bounced back and forth, back and forth, back and forth. And then we came down here and that consolidation level got smaller. And where did that consolidation level get smaller at? Towards the lows, So that's a sign for me, at least, that the bulls were running out of strength, right? In the past, they were able to, the buying pressure was able to push it up. Buying pressure was able to push it up. Buying pressure was able to, no, not so much. Push it up only to here. Buying pressure was only to, push it up only to here. and eventually it broke lower. Now, if we zoom out our chart, there is a lot of room to the downside. We did get stuck at this minor level of structure, so that's kind of a monkey wrench in our plan, but we can certainly go down lower on this pair to really 105s wouldn't be out of the realm. 105s, 104.40s, anywhere in this area can certainly be considered a move that price action can make. We'll do a little bit more on that in the syndicate this week when we actually get a clearer view of what our trading opportunity is. But the point for this Forex market preview video is that we can go lower. There is room to go lower. The question is how we're going to get lower. So perfect opportunity to throw in our IPDE, identify, predict, decide, execute. If you guys are not familiar with that, make sure you head over to our website, tradeempowered.com. Watch the Into the Gray video, free. I think it's a 3-hour workshop teaching you really our thought process on how we analyze a price chart. Yes, it's free. Do it. It's not free. It costs you an email address. Whoop-de-doo, right? Hopefully we have your email address anyway. That way you stay up to date whenever we make some pretty decent offers, whenever we do any more free training. But what we're looking for here is a retest of structure. So we're going to go down to the 60-minute chart. You want to jump all the way down there? Sure. Let's go down to the 60-minute chart here. Let me just find where I put it. So many charts up. Here we go. Let's go down to the 60-minute chart here. And again, we identified the lower low, lower close. We predict that is going to be a sign for a bearish continuation. Now we have to decide and execute. So decide, meaning flipping through our trading plan and seeing, hey, in this scenario, in this trend trading scenario, how can I enter the market? And then, of course, execute is E. That's pulling the trigger. It always seems like the easy part, but believe me, it's not. Many people, it's kind of sad. Many people do all of the analysis correctly, but then they can't do the last part. They can't actually pull the trigger, and it's kind of like they get gun shy, which is tough. And it's you may ask yourself, well, how does that happen, Akil? And it's when you have money at stake, right? This is one of the biggest differences between going from demo trading to live trading. When you have money at stake, guys, it's really difficult to make that call. It takes a lot of trust, but it also takes a lot of guts as well, especially when you first get started trading. So that is a common error that traders make. That's why having a support system is key. It's crucial. I'll tell you what, a little bit of extra confidence, right? Imagine someone just next to you, a good friend of yours, saying, hey man, you did everything right. Just go ahead and just finish it out. Right? Sometimes that little push is the difference between a trader breaking through that threshold of that mental block or just forever being gun shy and never actually trading. Another story, we have traders as well that they self-sabotage themselves. I've had traders that I've worked with through my training course, and they are excellent traders, meaning they can do their analysis is on point. They've gone through their money management. They've done everything the right way. They've done everything they're supposed to do as far as setting up their trading, but they never actually trade live. They continue back testing, they continue tweaking a strategy, and they use the excuse that, oh, I'm just trying to get it perfect, or I'm just trying to add this, but in reality, they're scared to pull the trigger, and they use that as an excuse never to do it. And that's one of the harsh realities of trading. There's so many flaws out there. I can go on forever about that. If you've seen my trading blog series, I've talked about a good few of them. But it's just that's one of the sad ones, because they're really good traders not taking advantage of their opportunities. But back to the technicals, because that's what you guys want to hear. Actually, you guys love the psychological stuff even more. But here's what I'm looking at, right? So we have our previous DSR level right here. Right, you can see a few of them. We have our DSR level right here. We also have our little new structure low zone in here. Price action has bottomed out. We've come down to that previous level of structure that I showed you on the daily chart, and we started retracing off of it, right? I'm going to try and zoom this in. Sorry for your eyes. We made a move, right, from here, right, our new structure low, to here. And then we started to consolidate in a bit of a pennant pattern. Now, we'll see how this is. This is, it's the weekend, so Friday, markets get weird on Friday. But typically when you see this formation, it's followed up by a breakout to the upside. And the traditional rules for pennants and flags is that breakout to the upside should be of equal length of the flagpole, which is that blue arrow that I just drew on. So we get a breakout, an equal measure move. This is also going to be considered an ABCD pattern. So let's just draw that on. A, come on, there we go. Give it to me, baby. A, B, C. I didn't draw the retracement in, but this little deal here would be our C. And then this is our potential D, question mark? Because again, it's not technically a D leg until it gets hit. But we're predicting, right? So let's draw this level out here. So we have a potential ABCD pattern completion up at 108.35, right? So of course, what do we want to do next? If you guys are a veteran member of my live trading room, the syndicate, or just here on YouTube, you probably know what I'm going to do next. Throw some fibs on it, right? Throw some fibs on it, Akil. So let's take our Fibonacci extension tool this time. Earlier, I showed you the Fibonacci retracement tool. Let's take our Fibonacci extension tool and draw it from our A leg to our B leg, swing low to swing high, and back down. You're going to see that I have a 127 Fibonacci extension lurking around that area. So no, it's not exactly on it, but you'll learn very quickly in the market that things aren't always exact, right? They come in zones, right? We can also go back to our good faithful, right, Fibonacci retracement, drag it from, right, our swing right here, swing high to our swing low right there, and you'll see that I have a 50% Fibonacci retracement lining right up at that level. Now, I must say this, 50% is not a Fibonacci level, right? I get this all the time because we have certain people that are very critical of my videos and they like pointing out every single misstep or misspoken word that I do. Actually, that's not too true. I've scared off most of the trolls because I pay them no attention. But the 50% level isn't technically it's not a Fibonacci level, but it is a psychological level, and that's why we want to keep it on our toolbox. Let's actually do one more now I'm looking at it. Let's take a Fibonacci from this minor swing high to swing low. I'm calling 786. Come on, baby. You know I'm right. Come on. Oh, yeah, baby. He's so good. Look at that. 786 Fibonacci retracement there as well. So let's just get rid of some of this junk here. And you'll see that once again, we have a 127. We've got a 50%. We've got a 786. We can technically, there we go, bring in a 1414 as well. I don't really use this level too much, but it's going to be there. You can see we have a nice Fibonacci cluster between 108.28 and about 108.40s. Now, the bigger kill zone here, or the kill zone as they say in the streets, right, is from here to here. So this is the bigger potential reversal zone in which I would look for the next bearish move. But inside that bigger potential reversal zone, this smaller zone is really what I have on my radar for a bearish opportunity. So just like the trade I showed you earlier, right? We have the prediction. It doesn't mean I'm going to put a limit order right there and sell. There's nothing wrong with doing that. That's just not my personal style. But I'm going to wait. I'm going to watch price action. I'm going to see if it comes up to this level, and then I'm going to start building my case for entry, right? So far, if you want to take for you guys that are familiar with our CTS system, Combined Technical Score System, I've got an ABCD pattern completion there, and I've got minor structure. So I've got about a CTS of 3. I got Fibonacci influence, so CTS of 4. We can start adding more stuff like RSI being overextended. So if the RSI goes overbought, we can add double tops. We can add a price pattern reversal signal. Once price action gets to that level, we can build our case more. But right now, as it being the weekend, all I want to do is identify what levels in the market do I want to pay attention to. That way I don't miss them if they get hit during the week. Now, of course, you want to measure out your risk reward. This is going to differ depending on if you're a trend trader or a trend continuation trader or just a trend following trader. Well, actually, we'll save that for the syndicate if we look at this throughout the week, just because there's going to be different scenarios on how you can do it. And we want to keep these Forex market preview videos as simple as possible since they're geared towards newer trader. But looking for a short opportunity here on euro yen or dollar yen, excuse me. We saw the 2 bracketed pattern formations on the euro dollar as well. That's a little bit of what's on my radar heading into the second full week of September. Now, if you like what you see, guys, right, do me a favor, head over to our website, tradingpower.com/Forex market preview. You can sign up to get this video each and every week sent to your email. That's a good thing because we also email out whenever we do free workshops or we have free training events. So you want to be on that list. And also, if you're new to this YouTube page, hey, subscribe. I sometimes do videos throughout the week. I haven't been doing as much as I've used to, mainly because I'm putting more concentration into our syndicate program. I'm trying to do a daily video for them now each day as well. But every once in a while, I do produce a video for YouTube if we have a fun conversation in the live room or if we have a nice trading opportunity that I want to share with the world. So subscribe and just stay in the loop. And lastly, of course, if you want to stay involved, if you like these sort of ideas and you want to see this on a daily basis, if you want to stay in the loop and keep your eyes on what two professional traders are seeing each and every day, make sure you check out our syndicate program or our live trading rooms. Live trading rooms would be a priority, I would say, if you have the time to spend 3 hours a day with us. But if you don't, the syndicate is an awesome alternative because, again, you get what we're watching in video format. You get that daily war room meeting from Jason Greystone where he's coming in each and every day and showing you the best trading opportunities that are on his radar. And then from me, again, you've been getting basically a daily video from myself as well. Again, it all depends on what the markets are giving us. But I've been shooting out a video almost every day, giving you some of the longer term ideas that are on my radar as well. So it's essential that you stay in the mix. It's essential that you stay up to date. And if you're looking to do that, take advantage of these programs that we're offering and start making a difference in your trading, right? Don't complain about not being able to achieve the goals that you set out for yourself, right? Do something about it. Put yourself in a position to succeed. So if you do that, and I will see you next week in our syndicate program, we'll probably revisit both of these opportunities and look at them in a little bit more detail, along with whatever else is on my radar. And if not, then I will certainly see you next week for another Forex market preview video. Thank you for watching. Thank you for liking. Thank you for subscribing. Thank you for sharing. And I really do appreciate all of the support that you guys give. Take care. You guys have a great week of trading. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website or also take a look and you'll see more videos available for you. Have a good one.